high probability position that we can lose our money to and find out if it's going to make profit for us. Okay. And when we come to that, it helps us understand that when we want to do anything in the market, either buy or sell. And with that, it means that the market either does what? Goes up, or does what? Comes down. Meaning that the candles also should have the ones that go up. Are you following me? And
Yes, sir.
then we should have the one that do what? That comes down. Hello? Are you following?
Yes, we are.
Yes, sir. We are following.
Yes.
Now, these candles that goes up and these candles that goes down, they both have names, different names. The green one, which I marked as one that goes up, and the red one, which I marked as one that goes down, they have a different name. And the name for the green one is known as the bullish candle. Are we following?
Yes.
And the name of the red one is known as the bearish candle. Now, I like to teach from my experience, not from what people said on YouTube or what people taught other people. I like to teach from what I have understood from the market. So my teachings might contradict what you have actually learned from YouTube. But just as you are seeing my signals on the group, does it work or not?
It does.
Hello, guys. Exactly. So we are working with what works, not what people that have money said. Okay?
Yes.
Are we following?
Yes.
So I would love us to pay a very good attention. I've tried my best to break down to you that nobody out there has the holy grail. Everybody is either trying to sell you their expensive courses or trying to make money off you by telling you that my type of trading is the best so that I can pay money to get it. There's nothing there. Are you following me? So you just have to
Yes.
pay very good attention right now and understand if you have a book, write down what I'm telling you, understand every single bit of what I want to explain to you here. It will help you in the future. Now, let's go. As I was saying, we have the bullish and the bearish candle. There's something most people don't tell you about this bullish and bearish candle, which I want to tell you now. For the bullish candle, in as much as it goes up and it comes down, it also tells you that wherever there is a bullish candle, buyers were at that point in the market. Okay?
Yes.
A bullish candle tells you that buyers left footprints there. Are you following me?
Yes.
Exactly. Meaning that at any point where you see a bullish candle, sellers will be attracted to those candles to sell to them and dump. Meaning that most of the time, when there is a bullish candle, sellers love to go up to those places, sell to them, and dump because that's where buyers are in the market. And just so you don't get misunderstood, if you want to sell your phone, who do you sell it to?
A buyer.
Exactly, you sell it to a buyer. So in the chart, you just want to look for areas where there are buyers in the market, and we sell to those buyers. Just as easy as that. But we'll continue. Let's continue. So that's for the buyers. Now for the sellers, it is also represented as the red candle. Good. Meaning that sellers were there in the market. Meaning that buyers will want to buy from here and then push up. We'll still get that. But this is exactly how a candle should look like. Now these candles, they have labels. This small thing you're seeing here is called the wick and is a retracement. I'll explain to you what a retracement is. They are called wicks. a week. The same thing with this one, a week. The same thing with this one, week, W-I-C-K. Same thing with this one, week. Are we following?
Yes.
Yes, sir.
And then this big block you are seeing here is called the body.
Body.
The same thing with this one. Please, are we following?
Yes.
Yes, sir.
Exactly. Now, another thing I want you guys to understand is that these candles take time to form. They form during a period of time, and this time can change when you change it. Meaning that a candle can use 1 minute to form, it can use 5 minutes to form, it can use 10 minutes to form, it can use 1 day to form, it can use 1 year to form. When I mean form, do you guys understand what I mean by forming?
Yes.
What of those I don't understand? Do you understand now?
Mm.
All right. What I mean by forming is this: a candle has an opening price and a closing price. And this opening price and closing price differ for the both candles. For the bullish candle, are we following?
Yes.
Yes, sir.
Market opens from the bottom, moves up to the top, are you following me?
Yes.
Yes.
And closes. Why for the bearish candle, market opens at the top, moves down to the bottom, and closes. They might be wondering, what are these wicks? Let me not tell you what these wicks are. When market opened at this point, it moved down but could not close down. It now went back up with a retracement, and then this body moved up. Why is there a body here and there's no wick here? When this market opened here and moved down, it moved down with a red candle. It moved down to this point with a red candle, but went back up with a wick, back to the opening price, and pushed up with a green candle. Please, do you understand my explanation?
Not really.
Okay. What I mean is that at the opening price, it was not before a candle is going to open. You cannot tell if it's going to be bullish or bearish, even if it is currently. Let me use my chart to explain to you. So this our trade did only 2R, and then 2. It hit only the second target. It could not go to the third target, and then it went back up. But let me show you what I'm trying to show you. Let's go to the 1 minute time frame. Now, can you see that as this candle was dropping, it's dropping back with a line?
Yes.
Can you see it?
Yes.
Why? Because buyers moved from here to here with a body. Can you see this body that is moving up? This body you're seeing here.
Yes, sir.
The market moved from here with a body, but still dropping down with a wick, telling you that we had the footprint of buyers got to this point before we started coming down. I see it as it has closed, another one has opened, but it's just a line. It now came down with a black candle. If it goes back up, it's going back with a wick. It's going coming down with a black candle. This is a sell candle because it's opening at the top. If it closes at this place, it's closing at the bottom. But if it goes back up from there, it will go up with a wick. Let's watch. Let's watch. Can you see? Can you see the wick now?
Yes.
Yes.
Exactly. So do you understand what I meant by the explanation I made?
Yes.
That who else don't understand, please? Does everyone understand?
Me personally, I understand.
Yes, I understand, sir.
All right. Let's continue. Good. All right. So for the bullish candle, it opens at the bottom, closes at the top. For the bearish candle, it closes it opens at the bottom, as it opens at the top, closes at the bottom. These wicks are the highest and lowest point the market got to. So here is the lowest, here is the lowest, here is the highest, and here is the highest. Are we following?
Yes.
Yes.
Exactly. Is any questions on the candles?
None from me.
All right. I guess it's not for everybody. Now, when these candles form, I told you they take time to form. Are you following me?
Yeah.
It can take 5 minutes or 10 minutes for them to form, 20 minutes to form. And what does that mean? It means that when a candle opens, it has a time frame it's going to use to move up and down before closing. And you can decide that time frame by just changing it. Now, when I went to the charts, I moved to a particular time frame to show you guys an example. And that time frame I went to was a 1 minute time frame. Let my chart open. The time frame, can you guys see my screen?
Yeah, we can see your screen.
Yes, sir. Yes, sir.
So you can see over here, can you see this place at my cursor is, my round cursor is here. We are
Yeah.
seeing interval. This means it takes 15 minutes for each of these candles you are seeing here, especially these ones. Now, all these candles are formed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It took 15 minutes for each of them to form. This last candle took 15 minutes for it to form. This last candle took 15 minutes for it to form. This candle took 15 minutes for it to form. This candle took 15 minutes for it to form. This candle took 15 minutes for it to form. This candle took 15 minutes for it to form. Do you understand? Do you understand?
Yes. Yes. Yes.
So when I move to 1 minute time frame and I change it to 1 minute time frame, there will be so many candles because in a 15 minutes candle, in a 15 minutes time frame, we have only one candle. But if I should analyze that 15 minutes candle on a 1 minute time frame, how many candles should we have there?
15.
15 candles. Are you following me?
Yes, sir.
Yes, sir.
So you can see now there are so many candles here. All these candles are taking 1 minute for them to form. When we came to this place, it was all these candles we are looking at that
Yeah.
went up and came down. Then this black one formed. But just in the space of talking, we have 1, 2, 3 that have formed already. The fourth one is now forming. Are you following me? Why? Candles form faster on the lower time frame. That's why they normally advise most people not to go to lower time frame trading. But yeah, with me, everything they told you is because they failed at it. I'm going to teach you what I didn't fail at. And if you like it, you continue at it. Just understand that anything they're teaching you is not for you. If somebody says, don't jump that river, the reason why he's saying not to jump the river is because he failed at jumping the river. But one thing about life is that because someone failed at something, doesn't mean you're going to fail at it. Am I making sense, please?
Yes, you are.
Am I making sense, please?
Yes.
Exactly. So let's continue. So each candles take time frames. There's a period of time it takes for each candles to form. And the lesser the candles, the lesser the time frames, the more the candles. The higher the time frame, the lesser the candles. So if we have a candle on a daily time frame, how many candles will it be on a 1 hour time frame? This is a 1 day time frame candle.
60 candles.
60
Sorry, what did
on a
you
one
say?
hour. So if we have a daily
24
time frame
candles.
candle,
20,
24.
how many
24,
candles are we going to have on a 1 hour time frame?
24.
24.
24, 24.
That's to have 24. Now, this is where trading gets interesting. You see, when candles form, let's say this daily time frame candle form. Are you following me?
Yes.
And we have 24 candles. Those 24 candles form towards a particular direction, which we call a trend.
Okay.
Trend. And it's from this trend we can now tell if we are going to be placing a buy or placing a sell. Hello?
Hi.
Am I
Yes,
making
sir.
sense?
Yes, sir.
Hello, sir.
It's from this trend we can now say we are going to buy or we are going to sell. Are you following me? So when a candle is forming, let's say we have bulls, bullish, bullish. Are you following me?
Yes.
Yes, sir.
This is telling you that we are what? In an uptrend. It's bullish. Then we have bearish, 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 bearish. We are in a what?
In a
We are in a
downtrend.
what, please?
Downtrend.
Downtrend. Then we have a time where the candles don't go up, they don't go down. We just have that's where that thought thing I told you. We either buy or we sell or we do what?
We wait.
Wait.
We wait. So during these times we just wait. So these trends have names. The one that goes up is known as the bullish trend. The one that comes down is known as the what?
Bearish.
Bearish.
Bearish. The one that goes like this is known as the ranging or sideway. Sideway. Please, on a scale of 1 is to 10, how are you understanding, please?
Sir,
10.
for me, 10.
All right. That is encouraging to actually put it. Hope you're not feeling sleepy.
No,
Oh, no, no. Sleep.
we're active.
All right. Let's continue.
Person when not get money, not dey sleep.
Let's continue. Okay. Now, being that we've understood that when candles are forming, they can be bullish, bearish, or ranging or going sideways. It helps us to even furthermore get profitable entries that can actually go towards our direction so that we can have more wins and lesser losses. But now there's something that I told you guys about. See, my pattern of teaching trading is different, very, very different because I didn't learn it the way most people learned it. I didn't go for mentorships. Are you following me? I tried getting mentorship, they gave me $1,000, but I lost more than that to learn the truth about trading. I It was a hard process, but I liked the fact that I learned the way I learned because I had to learn from my own experiences and from my own findings. Most traders are stuck today in trading because the mentors they are learning from did not learn from their own, like they did not have their own personal experience about the market. Another mentor taught them. So that mentor that taught them poured in both their mistakes and their rules they made in avoiding those mistakes. Mistakes that not everybody can actually fail at. For example, they tell you when you are driving, don't go like if your mom is beside you when you are driving. I don't know if anybody has experienced that. And you are crossing one twin, you will just see them looking at your speedometers as if they be like quietly looking at your speedometer. Are you following me?
Yes.
Then they will be trying to hold the handle, and then they will telling you if I'm Igbo, Jiri Awayo, or calm down, or hankali if you're Hausa. Are you following me? Why?
Yes,
Because
sir.
they feel that if they are the ones driving the way you are driving, are you following me? They might have accident. Are you following me? So if that kind of person mentors you, you might use 2 days to travel to Abuja from Owerri. Are you following me? Whereas another person that had a business mentor as his driver might help you get to Abuja in the space of 6 hours. Are you guys understanding where I'm coming from now?
Yes.
Yes, sir.
Exactly. So most people pour in the mistakes and how they handle it into people without knowing if those people can actually learn how to pass those mistakes without making them. And that is why I like the way I learned. And it's the way I learned. I want to make you guys understand. You're not going to go through the process of reading. The PDF I created is just for you to just go, you know, read some things and understand it. Because it's mostly my strategy that I try to pour out into that PDF. Read it and understand it, and come back to my classes. I follow me. And I'm not going to lie to you. You will endanger yourself if you go in to go and look for more YouTube videos to watch. You're going to endanger yourself. Just listen to what I'm saying. I have a YouTube channel where I drop in most of my trades and most of my strategies. You just go and watch it. It helps you better to focus. So, but what I'm teaching you, you can also use that to get your own strategy and all that. Let's continue. So as I was saying, when market is moving up, it moves up with a bullish candle, but not totally a bullish candle. There are times where market is going to make try to reverse, which will print a red candle. Are we following?
Yes.
Yes, sir.
And those times where market are trying to reverse is because there is something like a rejection on top, which we call a structure level. I've used one night to explain a class or a course that should take you months to understand, but don't worry. If you are not grasping it gradually, I'm still available. As long as you're in this community, you're going to be having classes with me. So anytime there's an area where there's a structural level, and I'll explain to you what a structural level is, no worry. Market tends to, react. Are you following me? Try to calm down a little bit. But if they fail, buyers will take over. Sorry. If they fail, buyers will take over and break that structure to the upside. Are you following me?
Yes.
Are you following? And then once that structure is broken, this area where there were sellers in the market becomes an area of interest that buyers are going to look at in the long run. This will be an area of interest. Why is it an area of interest? Because it is a full-bodied sell candle that has list of prices. There's going to be prices around here at the edge of the screen. So it's an area of interest that has a whole lot of prices you can choose to buy from. So in the future, after market has gone up, it will come down to those levels where this candle was formed and take and make another high and push up the upside. So we might have, after breaking structure, it might have more sales candles, and then for we now have more bulls to the upside. Please, do you guys understand?
Yes,
Please,
sir.
do you guys understand? Oh, let I explain it again.
Yeah, you can.
Really
One
not
more
really.
time.
All right. As I was saying, the market is moving up. It doesn't totally move with a green candle. There are times where it will have a rejection. And this rejection is that sellers are trying to convert this up newly formed trend to a downtrend, trying to bring it down. But once they are not able to do that, and buyers take over and significantly do what we call a break of structure. Let's say there's a structural level here, and market was able to break that place after there was a form of indecisiveness around there. What happens in the future is that market will come back to this level, let's say the closing price or the wick of the candle. We come back to that level. Are you following me? In the future,
Yes.
it's a red candle selling. Most people now think that market wants to sell. No, they're coming back to sell their to buy their good, like market is coming down to buy from this seller and push it up. Because it's the last place sellers were in the market. And only buy from the seller. So the market will come down, buy from these sellers, and then do what?
Push up.
And then do what?
Move up.
Hope to be observed. Please, do you understand?
Yes, I do.
Making sense.
Now, let's say this is happening on a 1 minute time frame. This is a 1 minute candle, 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 and this is happening in 1 minute time frame. Are you following me?
Yes.
This place becomes the highest point the market got to on this uptrend, because this is the complete uptrend now, and then this becomes the lowest point the market got to, the new lowest point the market got to. And then once this market starts pushing up, making new highs, now this is an example of a structural level. This highest point creates a new structure. I'll explain to you now. This highest point creates a new structure. As market is pushing up, there's going to be some sort of retracement, because on a structural level, on the previous high, it acts like what we call a resistance. What is a resistance? It's like a ceiling. If you bounce a ball on the ground and get close to the ceiling, what actually happens?
The ceiling will send it back.
It
To
bounce
bounce
back.
back.
To bounce back. So it's just reacting like here as a ceiling, known as a resistance level, trying to bounce back. But if there is more momentum, let's say the person that is bouncing the ball decides that as the market is coming down, he slaps the ball back up. What's going to happen to the ceiling?
It
Breaks the ceiling.
Breaks the ceiling. So that piece of momentum that happens becomes an area market is going to look at to come and tap into to continue the trend. Please, am I making sense, please?
Yes, you are.
Yes,
Yes,
sir. You are.
Exactly. So now on an uptrend, we had a high, we had a low. Here becomes a new higher high, and then if the market comes back into this red block and pushes up, it becomes a new higher low. So with this being said, the character of an uptrend is this: high, low, higher low, higher high, higher low, higher high, higher low, higher high. Okay, are you for the
Yes, we are.
yes, sir.
good? And then in the process of making a higher high, which I showed you guys, we have what we call a break of structure. That is the ceiling we're talking about. A break of structure. Break of structures, break of structures. Are you following me?
Yes.
Then those red candles that occur before the break of structure are known as, for the uptrend, are known as the demand level. That is an area where there was momentum that could, just like I explained to you, when the ball is coming down and it's trying to slap the ball back up, that is areas where momentum came from, known as the demand level. Demand level. Are we following me?
Yes.
Yes, sir.
And this demand level, are you following me?
Yes.
Yes, sir.
They appear as, you still get to know this in the future, other blocks. Are you following me?
Yes.
Consolidation. They appear as other block or consolidations or a ranging market. They come as either an other block, a consolidation, or a ranging market. That is demand levels come. Please, are we following?
Yes.
Yes, sir.
Exactly. So what happens in the chart is that the market moves up, comes down, it makes a high and a structure. Now, what is this structure? Because most guys might not know why the structure is being formed. You just know theoretically that when a high is formed, it just creates a structure. Let me tell you what a structure is. What is it? Can someone tell me the price of fuel now and tell me your location?
Yeah, 900 here in Onitsha.
All right. Who is going to help us again?
I
Onitsha
buy around
900.
numbers.
I
I
think
don't
it's
know
about
the
the same
price
price in Ilorin.
You say?
It's about the same price here in Ilorin.
Okay, I like that. Onitsha 900. Ilorin about 900. Who else? Who else is in a different location?
I'm in Port Harcourt.
Okay. What is the price? What is the price in Port Harcourt?
I think 1K the last time I checked. I'm not really like a
Yeah.
serial fuel buyer.
All right, 1K. I'm in Owerri. I buy 150 black market, and then normal fuel I buy 9.
Futo 1K. Futo 1K.
Futu. Is it?
Yeah,
Which kind of futu are you?
Futo
Itagua.
2.
Okay, here I go
Ezobodo,
1K.
Ezobodo.
So let's just say Owerri. Let's just range it to Owerri 1K.
I'm in
All
Ezobodo.
right. All right. Let's do Eziobodo 1K. Now, this is a structural price in the country for fuel. 900, 900, 1K, 1K, meaning that there's no place you will go to in Nigeria that you will buy fuel for $500. Sorry, for 500 naira.
Okay.
True.
Exactly. And there's no place you go to in Nigeria that you buy fuel for 1,500 naira.
True.
Are we following?
Yes, sir.
Exactly. Now, something usually happens that, let's say you traveled from Ilorin to Port Harcourt, and then immediately you got there, you got where you're going to stay, you now want to go and buy fuel to own your gen. And then when you go to go and buy the fuel, you now see that fuel is 2,000 naira in the filling station. What are you going to do first?
I'll be shocked and surprised. Like,
Be hesitant
You'll be
to
shocked.
buy.
Exactly. You'll be shocked. In fact, you will say something like this. You see, like, Omo, in Ilorin, you buy fuel for 1Q,
Yes.
isn't it?
Yeah, it is.
Exactly. Then they'll be like, nah, lie. You'll not be like, call my guy for you. You now pick your phone and call your guy and tell your guy, how far? How much is fuel in Ilorin? He will not give you a better shopping price. Fuel is 2,200 now. He just increased fuel price yesterday. Who has experienced something like this before? Hello?
Yeah,
It does
we can
happen,
hear
but I'm
you.
not
Yeah.
experiencing that.
Exactly. That is a sign that a structure has been broken. Are you following me? The structural level was 1K. But when the structure breaks, you realize that every single person in this country respects that structure. That's what the structure is all about. So in an uptrend, when a structure, hope you guys understood the structure properly with this illustration.
Yes.
Exactly. So in an uptrend, when the structure is broken, are you following me?
Yes, I am.
It is called break of structure, BOS. Break of structure. Okay? Then the next thing that happens is that you want to now look for the demand level. See this strategy, see this thing I'm showing you guys, it's one of the first strategies I learned and I disregarded because it was making me lose sometimes. Good. Then the demand zone, because there's definitely going to be a reaction around there. Are you following me? Is a structural level. Market is going to try to sell But once buyers take over, that demand zone becomes an area that buyers are going to come back to buy from. Market will come back to that place and then what? Push up. Is that we for
Yes, yeah.
Yes, sir.
now? Pushing up from here doesn't really mean that you are certain that market is going to go back up. So that's where 3R comes in. We tend to put our stop loss below the demand zone, our entry at the body of the demand zone for the up, and then we target at least 2 to 3R. Don't target and want to hold the trade for a very, very long time. No, you just follow the rules of the character of an uptrend. You identify what you identify, and then you take your trade. Are we following?
Yes.
Yes,
Yes.
sir.
Exactly. Now, let me show you guys something on the chart. This trade we took today, you understand, it was a downtrend, but there's a break of to the downside. But there's something that is significant about this break of structure, which we're going to learn. It's called sweep, but we'll get to that. See that over here, market did what? BOS. Do you agree?
Yes.
No.
Do you agree?
Wait,
Why don't
market
you
did
agree?
what?
Break
What
of
do you say?
structure. Break of
No, I don't
structure.
think I don't think that is the place of break of structure.
Why? Why don't you think that?
Because that place is not a structural point.
Why is not a structural point?
Me, I'm not. It's like I'm not following. Can you scale it down?
Okay,
It's
that place is a swing low, but it's a break of structure now.
Yes.
is it?
This why is a break. This why is a break of structure.
Okay, I've seen it clearly now. It should be a break of structure. To the downside, I guess.
Yes, to the downside, and then came down to this level.
It was a break of structure to the downside, yeah.
So does anybody else agree that it's not a break of structure? Disagree it's not a break of structure? I just missed a trade. I just missed a trade. Damn. Let's continue. Does any other person disagree that it's not a break of structure? All right, we all agree that it's a break of structure. This trade now that
Yes.
I missed now, I'm not happy about it. If I don't chop this one now like this, a nice entry from here. So let's continue. Good. So now, as market broke this place, it was coming down with a sell, isn't it? But
Yes.
before getting to this structural level, are you following me?
Yes.
We can see that there is an order block here. Are we following?
Yes.
Are we following?
Sir,
I
yes,
did not
sir.
see the other block. Oh.
Yes, sir.
Okay.
Order block.
It's another block, yeah.
Are you seeing it? It is trying to push it back up, but it failed. And when it failed, it is from there sellers did what? Boom, 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 and then it broke the structure. Are you following me?
Yes.
Yes, sir.
Yes.
Immediately that happened, you can see I put a line there, and that is where we took our trade from, which ran up to 2R. Are you following?
Yes, I'm following.
So you can see it is easily identifiable. No noise, nothing, just you and the chart doing what you are supposed to do, following the mechanism of how market moves and respecting it and doing what you're supposed to do. Okay, this one just broke this place. For my old students that have been trading with me, I'm sorry I betrayed you guys. You know, it's the first strategy. I have two strategies, and when market is misbehaving, are you following me?
Yes.
I tend to go back and back test and see which one has been working for a very, very, very long time. The first one is my type A. The first one is my type A plus strategy. This one I'm using to show you guys my type A strategy. I have A and A plus. I don't have B. That way. And what I'll be using to give us signals is this A. And that's what market has been doing currently because the market has been volatile. If you notice on the timeline, on most traders' timeline, people are crying in the market. But
Yes, so
exactly, people are crying, and because your strategy is no longer working again. That is why you have to study. There's nothing that beats studying in trading. When you study, you now realize, okay, is this particular edge I'm using, and both my strategies are the same. They are the same concept. Like, it's not changed. Are you following me?
Yeah.
yes.
Both strategies are the same. I don't change my concept. It's the same, but the entry approach is different. And you gradually understand this as you keep going. So you can see that when market broke this structure here, it it came back up with this bullish candle. Let me change the color of my candle so you can understand it better. Good. Can you now see it properly now, right?
Yes.
Yes, it's clearer.
So this green candle was the bullish candle. It was trying to push the market upward, but they failed. And when they failed, what happened? It broke low, and then immediately I took that trade from there to sell. Easy as that. The same thing I'm seeing here also. I said, I just lost the trade. This market pushed this level. It's very tracing. You can see the first retracement, right? Telling you that, okay, this pressure level is strong. I follow me, you should sell from there. Then went up again and then brought out what? Went up again and then brought out the red candle to push the market down more. But what happened? After this red candle, market did 1, 2 and broke this high. Immediately, I should come here on top of that red candle, take my trade from here, put my stop loss just under here and 2 to 3 hours. Please, are we following?
Yes.
Yes.
Now, you see this consistent approach of just doing one thing for a long time, it's going to help you statistically journal properly and help you in the long run manage your portfolio for you. You don't do it because you are going to win. You do it because you can afford to lose.
Hello, sir.
If you yeah, hearing it.
Is this class recorded so that you can go
No,
back
it's
to
not.
it?
It's not recorded.
Okay.
Not recorded. I have videos on YouTube. I will post on YouTube later. YouTube link
All right.
later. I have videos on YouTube where I drop videos so that we can actually.
It's fine, sir.
Hopefully,
Yeah, we are following.
Sorry, I have a question.
you can have hit me.
The other block is kind of confusing me.
Okay. What's confusing? Just you can tell me what you
The other block.
feel. You want to know which one is the other block, right?
Yes, yes.
Right. Now, if you started this class with us from the beginning,
The beginning.
Don't think so.
yes, like today, it went halfway.
I started from the
All
beginning.
right. Yes,
Like you showed off the trade. Like now this pattern that you use, then you now talked about the other block. Just that part that
okay,
I
but
got
did you
confused.
join when I started talking about candles?
Yes. Though
Yeah,
I
I
started
told
halfway.
yeah, exactly. So I was telling you that when a bullish candle is forming, like see this one, 2, 3, 4, 5, 6. They don't just form completely. They form and also there's going to be a red candle while it's forming. This trade, I'm taking this trade. If it comes back to this entry, if you all can join me, if you have what you can afford to lose, please you can join me. Once it comes back to this entry, I'm taking this trade from here. So as I was saying, the market is doing 1, 2, 3, 4, 5. There are areas it gets to where it wants to reject, and then a selling candle will come in. Can you see this selling candle here? Can you see this candle here?
Yes,
Yeah, we
I
Yes.
can
can
see.
There are areas in the market where there will be a rejection, and when this rejection comes in, are you following me? And this rejection was able to cause something like a break of structure. Look at this place that market took out. This high that market took out. It was after this red candle the market made 1, 2 that took out this level. Are you following?
Yes.
Are you following?
Yes.
Once that significant move has happened, are you following me? Market will want to come back and tap it because there's going to be a whole lot of momentum building inside this candle. They're going to come and tap into this candle and push up to the upside. If the rejection of this candle now that is coming down, I think he wants to come down and take us out from here. It has take with what down this. That's why it's called an order block. There are so many orders that could be filled. Try to sell, but at the same time start buying. Orders will be around there, and from there, market is going to come and take and then push up. Doesn't happen every time. Happens, it should give you 2 to 3 hours, and that should be able to cover up 2 to 3 losses that you have made and put you back in profit. Are we following?
Yes.
Yes, sir.
Exactly. Any other question? Any other question?
No, for now. Not for now.
All right. So because of the time, I'm going to stop here for today. All I just need you guys to do is